AbCellera stock is the topic of today's presentation, and in our AbCellera stock analysis, we're going to look at particularly the progress of their pipeline. Now, there are quite a few people invested in ABCL stock, and our last presentation on this firm talked about why. It's because humans generally enjoy the prospect of uncertain rewards more so than certain rewards. So a lot of the potential coming from firms like this or Ginkgo Bioworks is the downstream that you can expect to realize later on. So really what you're doing is putting a lot of stake in the story. Now, people who have ponied up for shares of AbCellera stock haven't done so well, and we typically look at companies, not stocks. But I think this is important to take a look at because it kind of frames the mindset of AbCellera investors. And we've had several premium subscribers. Those are people who pay us money in our premium subscription offering, which we don't talk about much, but you can probably find that for yourselves. People who pay us money have asked for us to revisit this firm. It's been about a year. So that's one of the reasons that we're going to look at it. But others are expressing an interest, I think, because it's hitting 52-week lows, the stock. So people start to get very worried. They never get worried when a stock goes to the moon. That's not an issue, right? That's just expected. But if stocks start falling dramatically, everybody gets all concerned, and that's just human nature. So when we look at three different profiles here, on the bottom you can see the performance of AbCellera stock since they had their IPO. It's dreadful, right? That's minus 90% compared to the QQQ. That's a NASDAQ benchmark we use. That was up 9% over that same time frame. Now, if you go above that to the left, you can see year to date. So if you purchased shares of AbCellera at the beginning of this year, then you'd be down 43% compared to a NASDAQ return of 23%. And the chart to the right of that, this is a simple 1 year. So if you purchased the stock a year ago, you're down 9%, NASDAQ's up 20%. So a lot of people are wondering, why is the stock falling? Well, we're going to talk a little bit about some of the concerns that we have about AbCellera, noting that we do like this company. So this really sets the stage, and it's a research note from ARC where this title here, "What is Holding AI Back in Drug Discovery?" Implying, from ARC's perspective, that AI is not realizing its full potential when it comes to discovering drugs. And you see the sentence here, it says, "While AI models have become useful for identifying target molecules, this individual noted that sometimes they do not predict features like synthesizability, toxicity, or selectivity." And this statement here is quite telling. "By integrating computational prediction, automated synthesis, and downstream assays into one workflow," implying that you need that full life cycle of drug development to properly maximize the value you're getting from your AI algorithms. Well, that's going to take a lot of time because it takes a lot of time to bring drugs to market. By the way, I watched this presentation or listened to it. It's on YouTube, and it wasn't overly edifying. It seemed more to be this gentleman who was presenting was more talking about how his startup was doing things differently than others and that they were going to succeed at it. And on that note, there are a lot of AI drug discovery companies out there that are not public. The only two that we follow more closely are AbCellera and Recursion, though we're going to do a piece soon on all the publicly traded names. So this slide from AbCellera's most recent earnings call provides a couple metrics we're very interested in. That first one, the total cash. So they have $821 million. We'll want to look at the runway, how long that's going to last them. And molecules in the clinic. This is a picture of the potential wins that we can expect downstream. Now, one thing to note here is that all the benefits that AbCellera was realizing from the Rona have now gone away. So you can read their latest 10K. It talks about this, that in November of last year, the FDA announced that this drug that they had developed with Eli Lilly for COVID is no longer authorized for emergency use in any U.S. region. Well, that's a problem. And then it says here that Lilly and its authorized distributors have paused commercial distribution until further notice by the FDA. And of course, AbCellera predictably says, "We do not expect to generate significant revenue from royalties associated with Lilly's sale of our COVID antibodies." So the COVID noise has been removed, and that's great. And bulls point to the the compressed revenues they received as evidence of how well their platform can work. And that may be a little deceptive. We'll talk about why. So the questions we want to look at today: what's the runway looking like? So the cash they were able to get from working with Lilly and whatever cash they had on hand left them with a war chest. How long will that last them? And when will we see the first success story that's not Lilly? That's probably the most important. Now, when you look at the slide here from that latest earnings deck, it's a bit deceptive. So they say now 9 molecules in the clinic. Well, let's scratch Lilly, all right, because that's off our radar now. That leaves us with 7. And then when we start going through these, there's a bit of a concern here. And we've highlighted there where it says Triani license. So this is a mouse model they purchased in 2020, and we're going to talk a little bit more about that in a second. But if we look at the difference between the pipeline in 2022 and 2023, this most recent, or actually these are the two 10Ks, so this would be 2021 to 2022. And you can see they added 1 drug in 2021 and they added 1 drug in 2022. That's not expanding the clinical pipeline fast enough. So and that's what we're assuming, we'll talk about why, but when we look at the 7 molecules minus the Lilly stuff in their pipeline, we see this Triani platform. It's a humanized rodent platform they acquired in November of 2020. So it's not their core offering. That's important to note. And they said currently the flagship Triani mouse is available for discovery projects. And certainly there's some synergies between their antibody discovery platform and the mouse platform. But when 3 molecules or 43% of their pipeline comes from the mouse, that makes you wonder about the AI-powered antibody discovery platform. When you consider they also have 1 molecule for animal health, and there's not very many exciting things when you're looking at animal health drugs. We prefer human drugs that really make some money. That leaves you with 2 molecules, 1 from Teva and 1 from Denali. That means that 28% of their clinical pipeline, or just these 2 drugs, stand to demonstrate the promise of their AI-powered antibody discovery platform. Now, when you look at all the partners they have, this makes sense. So we've highlighted where they entered agreements with Denali and Teva. So if you extrapolate that out, then that's about 4 years ago. So maybe it takes 4 years from a signature on a contract to getting something into the pipeline. And as we said earlier, it's taking a while. So say it takes 4 years for a molecule to reach the clinical pipeline. They say here the probability for a molecule discovered by AbCellera to succeed in reaching phase 1 clinical trials is just 37%. Following that, meaning once it's in that pipeline, there's an 18.5% likelihood of it receiving market authorization from the start of phase 1. So, based on the current clinical pipeline, we can expect 1.3 molecules to progress. That's not very many. That's kind of betting everything on one horse. And you also need to consider the average antibody drug takes between 9 to 12 years from initiation to approval. So you figure, well, if you subtract the 4 years for that molecule to get into clinical, it's got 5 years left. So 5 years actually happens to be right around where their runway is. But the takeaway here is we shouldn't be surprised that there are no milestone payments that have arrived yet. But also, this is a numbers game, and we need more numbers. Now let's talk about runway. So this is a great chart. Love these little, I'm not sure what they call these, but this step down where they show you how the value changes based on different buckets. The operating bucket is what we're interested in here. That's a loss of $44 million. As we talked about recently and internally here at Nanalyze, we're going to start using operating cash flows to calculate runway, and it's very simply, cash and marketable securities divided by operating costs. And sure, this is just from 1 quarter, but it's a good enough gauge. Could be average, but let's just use this for now and say, well, if they have $824 million and they're burning $44 million a quarter, then they have about 4.7 years, let's say 5 years of runway. Hopefully that gets them to the first success story. And it's important they're progressing stuff because you can see a large percentage of the value, the milestone value, is in commercial. So they have about one drug they can expect to succeed. They're adding one clinical drug each year, it seems, to that pipeline. We want to see the clinical pipeline expanding a lot faster. So here are some what-ifs to consider. It could take a long time for AbCellera to progress a drug to commercial where 65% of the potential rewards lie. So it could basically just survive over time rather than thrive, especially if they don't expand that clinical pipeline. Now, another what if to consider here across this entire spectrum is if the Reddit wankers decide that AI drug discovery is the way forward. There's a possible hype play here where they drive these stocks up significantly, as we've seen before with the gene editing theme, and investors may want to consider taking some profits if they're up quite significantly. We did that ourselves on gene editing, though it's very rare that we'll do that and try to time the market. The other alternative is if the business realizes the potential we're all hoping for. If it's going to do that, we would believe that it needs to see clinical expansion happen faster. Breadth will lead to consistent revenues and less risk, while depth, if one or two drugs only succeed, you have more volatility and risk. And the question here is, how much merit should we place on the accelerated COVID success story? Because that isn't indicative of the 9 to 12 years that it takes for the typical drug to be commercialized. So we can't put too much value on that story as a demonstration of the potential of their platform. Now, just to conclude, checking in with a stock once per year really filters out a lot of noise, and it allowed us to very simply look at the change in pipeline and make some assumptions about the company based on that. This is an exciting story, no doubt. This is one of the few drug discovery stocks that we like. But we don't invest in stories, and we want to see more downstream progress, especially the clinical pipeline, which needs to expand much faster. Now, risk-hungry investors could buy shares right now at a 71% discount to what institutional investors paid at the IPO. But there's a couple questions that I'd just like to float to the class. Is the clinical pipeline too lean and growing too slow? Maybe there's a counter argument that says, no, that's proceeding as planned. Would like to hear that perspective. And this question here in particular, is anyone else concerned that 43% of the current pipeline is coming from the mouse as opposed to the antibody discovery platform? Now, before you answer those questions in the comments section, two things. I've put up another video here that you might want to watch. This was from a year ago, but before you do anything, please click the Nanalyze logo on the right. Subscribe to our channel. That helps support our work. Thanks so much for taking the time to watch this today.